Okay, so Palantir. Upgrade today on Palantir by none other than Mr. Morgan Stanley. Okay? Morgan Stanley, the elite Wall Street firm that has massive influence that can press one button up or down and a stock can move 10 or 15%. They have assumed coverage on Palantir with a $60 price target. Now, why is the wording assumed coverage and not initiated coverage? Well, Morgan Stanley has been on the Palantir train for a while. The problem is they were kind of like not like they were at the back of the train. They weren't actually at the front of the train riding this story because they had a price target of $12 on July 17th, and they increased it to $20 on July 17th. So back in July, Morgan Stanley finally decided, yeah, instead of 12, it's worth 20. Palantir ended the year at 75 as the best performing stock in the S&P 500. And quite frankly, the way a lot of these research banks or research firms work is that if you're an analyst at the firm, you can't really recommend a stock to your client if the firm doesn't agree with it. So if you're at Morgan Stanley and you think Palantir is like one of the best AI stocks in the world, if the firm has a price target of $20, you cannot tell your clients buy the stock because they're going to say, we're paying hundreds of thousands of dollars for research from your firm. And your firm says the stock's only worth 20. Why would we buy it at $40? As a result, hundreds of millions of dollars in gains were missed out for Morgan Stanley clients, which is why I think the previous guy who was covering Palantir got a little tap on the shoulder and he was asked to leave. I think that's what happened. Now we have a new price target and it is $60. So I'm not going to read the entire price target upgrade. I'll put a link in the chat if you want to read it. But essentially, and I'll make a video on it later on Daily Palantir, so we'll talk more about it. Essentially, the guy is saying, hey, we think that the valuation is extended, which is fair. We all know the valuation's up there. But we think the growth will match the valuation. We think the moat is differentiated. And we think there are key metrics that Palantir is showing, like cost per or revenue per client, AIP monetization, yada, yada, that allows them to end calendar year 2035 with about $25 billion in revenue, I believe was the note. And as a result of that, that is a reason why we're excited for the name, because we think it'll grow into it. Having said that, that's a pretty basic sort of initiation of coverage and analysis of that coverage. Why does this matter for investors? Number one, even though 60 is lower than the street estimates of 75 to 80 from Mariana, Wedbush, UBS, etc., the larger point is that the new note is that we are beginning to normalize a range for Palantir that is in the 60s, which is very, very exciting. Remember, many of the bears feel Palantir should come back to 35 due to its valuation. I speak to these people every day. I see their tweets. I see their posts. This is how they think of the stock, because I always want to get an understanding. How does the other side actually thinking about valuation? The bears have said this thing is the most overvalued AI name in the world, and it will crash aggressively. The bulls, most of us, have clearly acknowledged, okay, look, valuation is aggressive. We're not going to deny that trading at 70 times price to sales is aggressive, but that there is something special to Palantir, which in the words of UBS, that gave them an $80 price target 2 weeks ago, commands a material multiple ahead of their software peers. Many SaaS names tend to trade in line with each other and have traded at the same multiples in 2024. Palantir was the one name that diverged from all the other SaaS names that are trading in the same range. How do I know that? Well, take a look at this picture, because this kind of clearly shows what my point. Here are all the other SaaS names. When we look at next 12 months revenue growth versus next 12 months revenue multiple, as you can see, Autodesk, Salesforce, Adobe, DocuSign, Zoom, CrowdStrike, Datadog, all of them are in one corner, even if they're a little bit extended. And if we go all the way to the right and then go to the top, there's Palantir, literally on its own island. So the funny thing about this is Palantir does not trade at all with any of these software names. And this chart right here is why the bears say we should get a 50% correction. But wait a second, that's not what Morgan Stanley is saying. Morgan Stanley is saying, hey, we think $60 is reasonable, which means if we go from 80 to 60, that's not 50%. That's a serious drawdown. I agree that is definitely a dip in my opinion, but that's not going back to $35 or $40. So in my opinion, Morgan Stanley is one of the largest Wall Street firms, and they're getting on board, and they literally fired the old guy who had a $20 price target on Palantir. They have this new guy who has a $60 price target. And to me, it's pretty reasonable, because even if it's below $80, he's acknowledging that, yeah, there will always be some premium to make shares expensive, but that Palantir is the software AI story that everyone has been looking for, and it continues to get normalized as more firms outside of Wedbush and Bank of America begin assuming coverage. Again, the bears probably hate this. They believe that Palantir is some overvalued retail hyped up name. You cannot ignore, if you are a bear, UBS and Morgan Stanley. That is my warning to the bears. You could still be right. and we can still get to 40. Who knows? Anything could happen. But if you're ignoring UBS and Morgan Stanley, you're going to be a very salty bear, I think, over the next few years. Because what happens when it's not just UBS and Morgan Stanley? What happens when it's Goldman Sachs? What happens when it's Deutsche Bank? What happens when every single firm starts to say, you know what? $60, $70, it's not that crazy. It's not that crazy. So this is not just Dan Ives. It's not just Mariana. We're not just talking about analysts that have been bullish for a long time. These are new analysts that have been historically pretty damn bearish on Palantir, just in terms of where their price targets were. And they're increasing it because even they're acknowledging, all right, the story is getting much juicier than we thought it was. So overall, I think this is very exciting. This is another price target on the street that we needed to get. This is another validation of the stock being at levels that are actually achievable. Again, even some people think $60 is very aggressive, which it is. $60 is still aggressive just looking at the valuation. However, there is a premium in terms of the context of the multiple that these firms are recognizing, even if that keeps it pretty expensive. So here's what the analyst actually said right here. He said, while we acknowledge this positive inflection and we're looking for ways to become more constructive on shares, the lack of visibility on material estimate revisions leaves Palantir trading too far ahead of the company's intrinsic value to justify a rating upgrade. And then they talk about some of the things that they want to see on the next quarter. Nonetheless, they still set their price target at $60, which means if the downside to Palantir is 60, I mean, I'll take that any day of the week. If the downside to Palantir in a market correction is $60, I will buy that dip any day of the week and I will take it because $60 is still a $120 billion market cap. We'll have plenty of time to grow into that if we actually get there. And the fact that the street is getting on board with that, I think is also very, very exciting in the context of Palantir. So there you go. Another rating upgrade for Palantir. And it looks like Morgan Stanley is officially on board. So that's what we got in the context of Palantir. I don't think there's any other. Oh, well, there's one other quick piece of news that I'll acknowledge real quick just to show you guys, and then we'll move on from Palantir. Then we got to get into some stuff going on with Tesla. NHS. So we got another little update from NHS. I know we forget that this deal even happened, but the federated data platform is at the heart of the NHS. And Lewis Mosley, who's the basically CEO of Palantir in the UK, he's like the VP of everything in the UK. He highlighted that Palantir is helping more and more when it comes with the FDP. So the NHS put out this note today, January 2025, about what the federated data platform is doing, how Palantir is helping. In particular, they're right, using the FDP has helped to reduce the administrative burden on staff, increase coordination between trusts, which are hospitals in the UK, and reduce waiting times for patients. All of this being led by Palantir, which is the backbone operating system for the federated data platform. So we're seeing a lot of more updates in the UK in terms of what Palantir is doing. We're seeing a lot of more updates from Wall Street in terms of their emotions on the stock, in terms of how they're thinking of the stock. And as a result, we should be getting a lot more excitement, at least on the street, even if the stock is relatively flat or doesn't move, because more and more people are getting excited about the name for Palantir. That's what we got right now in the context of how the street's thinking about Palantir. Walter says right here, NHS appointments is slowly improving, just a bit too slow. Yeah, I mean, look, if it's better than what it was last year, then, or at least for the past 30 years, which, you know, it's probably not getting substantially better yet, but if it's on the trajectory upwards, then I think that's what people are going to get excited for when it comes to Palantir.